Hello and welcome to today's video. And in today's video, I'm going to be teaching you high probability entry models for you to trade it to make good profits. You can clearly see I have 1, 2, 3, 4 on my chart. I'm going to be explaining how you can work with them today. But before I get started, you need to understand for that this tutorial is brought to you by PipSciX, and our WhatsApp number is +234 8055369615, and I, Investor Theo, will be your host for today. Now, I'm going to work on with these entry models on our YouTube community. So if you're definitely watching this on YouTube, you have to stay subscribed to our YouTube community because we're going to drop in more concepts for you. Our next set of videos after entry model will be on liquidity. So you can understand liquidity and how to trade with them because it will help you understand the entry models better. Okay, so basically do it, subscribe, turn on notification bell, like, and share this video with others so they can also learn how to trade. These are premium content champs. All right, this content will help you learn how to trade properly. So with that said, you can join our Telegram community via the link in the description so you can see our setups, trading setups that I drop for free on Telegram and then trade to make money too. So let's proceed with this. Now you can clearly see action models. Like I mentioned, we have 4 of them on our screen today. I'll be talking about more as keep on going because there are a lot of action models. All right, but these are high probability models. Now, before I even talk about these action models on my screen, what are action models? To understand that action models are literally structures to look for, all right, with high probability of playing out. So there are structures that have high probability of playing out. So let me use this and just reduce the size to 24. 22 is okay. 24. Right, they have high probability, they have high probability of playing out. So structures with high probability of playing out. With high probability of playing out. So basically they have high probability of playing out. Now, if you're working with these structures, it means they usually occur on the chart. Some of them might take time before they occur, depending on the time frame. These structures now, I usually trade on the 1 hour time frame. If you trade on 1 hour time frame, it takes some time. If you trade on 4 hours time frame, it takes longer time. Right? But you just need to wait to spot them to trade because they're high probability setups. Now, this is the first entry model on our chart. Before I proceed, you need to understand for that we've talked about breakout structure and talked about change of character in our previous videos. If you don't understand breakout structure, if you don't understand change of character, these models will be difficult for you to understand. Right? Same way, if you don't understand liquidity, you might not really get everything I'm teaching in today's video clearly. Alright, but liquidity will be taught in next video. But yeah, if you don't understand breakout structure and change of character, you're never going to understand anything here. So make sure you watch my breakout structure and change of character video. You can check out the playlist and look for breakout structure video and worksheets so you can understand it better. Okay, because this entry model you can clearly see here is entry model based on change of character. Now, why they call this an entry model based on change of character? And clearly see that the market used the COCH as a liquidity. COCH as liquidity. It came with a sweep and then directly took us up into profits. Now you can use COCH as an entry model on its own, or you can also work with it as a confirmatory entry. So if you want to work with it as a confirmatory entry, before I even explain everything completely, you need to understand for it that you need to see this on a lower time frame within that same structure. So it's like a confirmation for you to enter. And so let's say you're looking for a sell example, for instance, and you have the structure formed up. So what do? You wait for a price to get your entry on the 1 hour time frame, if you're doing the 1 hour, all right? Then you go to a 15 minutes time frame or any other lower time frame and wait for the market to break a significant low, all right, and go back to test an order block. Okay, so once the market goes back to test order block, this gives it a higher probability of trading, and then you can work with it to trade. But yeah, I'm going to be using these structures and focus on this so I can understand better. All right, this is the entry model with COCH based on a liquidity sweep, and you use your order block as your POI. This second one here is also here. This is the dangerous entry model, but it's based on consolidations, and I'm going to teach you to how to work around it. So the first one, all right. So the market was in a downtrend, right? We saw the market coming down initially. The tsunami drag is up. Market was in a downtrend. Okay. So after the market came down, it did something like this, pull back, because you know in downtrend there's a lower high and lower low, right? This is a lower low, this is a lower high, then lower low. It formed the lower low. Now this lower low, as usual, broke this previous lower low. So let me use this tool so I can get it clearly. Okay. Hopefully you can clearly see what I'm showing you over here because there are small arrows here. Now this particular zone over here, okay, some people will never use this arrow. Some people want to use the trend line to mark it out properly and then call it a liquidity sweep. Okay, so people won't call it a liquidity sweep or whatever they don't call it. Okay, but what I want to show you from here that is the fact that the market actually came down and broke this soon. Some people might want to have buy orders here and took it all the way down because it's following the downtrend, right? It's more like break of structure to the downside. All right. So once this occurs directly, the market comes back again to break this top. All right, so this is the break again at the top. I've taught you COCH already, so I'm not supposed to explain this. All right, with COCH, you know it's the break, here's the break. Okay, I just put dollar sign to understand that, oh, some others were there. Okay, so now the market breaks this place again. Once you see that the market has broken the last low here and has passed the high that was there before, it means the market has stopped showing signs of downtrend and wants to move up. Okay, so what do? You don't just jump and start buying from this point at the top here. That would be wrong. Wait for the market to retrace back to an order block. So another block is usually around this region. All right, this is where the region of the other block is. So once the market gets back to the other block, okay, you enter your with your position two. These are long position two. You enter here for a buy. Stop loss beneath the other block. TP at the ARL, external range liquidity, and then this is Swift while ratio 6.32 trade. It's as easy as that. Like, it's as easy as that. This is entry model one. You can go to the market to backtest this model I'm showing you right now, and then let me just know how it plays out in the comment section. Entry model two. Now I call this a dangerous entry model. It's dangerous, but that doesn't mean it doesn't work. It's dangerous. Dangerous entry model. Why do I call it dangerous? Because it work consolidations, and we are aware of the fact that during consolidation markets, um, okay, I think I have to type that again. Okay, so we have dangerous entry model on our screen. Now, why is it called a dangerous entry model? Because this is showing consolidation of price. And if you work your consolidation strategy, you understand for what I explained that during consolidation, we don't really know where the market's going to. Is that going up? Is going down? We're not sure of the direction. It can either go this way or the market can decide to go the other way around. That's go down. Okay, we're not sure. But one way you can still spot how this plays out is when you observe that the market breaks out of this consolidation with a fake out. All right, breaks out of this consolidation with this move. So let me highlight the move so I can clearly see it. I'm talking about this move right now. Market breaks out with this particular move from this consolidation. Okay, breaks out with this move and then comes back to the consolidation zones. And when the market comes back, it comes back to an order block, picks it, and moves all the way up. So basically, with this method, you can also enter the market with your long position too. I'm just showing you everything by examples. All right, you can reverse it and get also examples easily. But yeah, this is where the buy entry will be from. The SL beneath all this liquidity over here. The reason why it's scary is because the market can come down to clear this liquidity and also clear SL. So that's why it's scary. Because if you understand full way from liquidity, oh, I've not touched liquidity, but yes, you understand liquidity, you understand that there's liquidity, there's money lying down beneath these levels. We should be learning our next video. That's why I pity those that don't subscribe. Just watch one and go away. It's a series and people pay for this, but I'm giving for free. So they have to maximize it. All right. So this dollar sign over here directly. Okay, and you're gonna see this entry from this region. So this entry is seen as dangerous one because market sometimes may want to pull back down. Okay, let me use this. I want to pull down to collect all this liquidity here before even going up to, so it can take you down anyway you take it. It's dangerous, but yes, it plays out in the market. So if you enter with this other block and it plays out successfully, you have your easy 1:3 trade here. You are targeting higher 1:5, just like that. Now to make your market with it. So that this for this entry model. We have two more entry models I'm going to discuss in this video. There are a lot of entry models, a lot, trust me. I'm going to be discussing just this four in this video. So the next entry model I'm talking about is this one over here, right? So there's someone that choose chart pattern. So this is right head and shoulder chart pattern. So basically, if you are working with this idea, you see that this is more like shoulder, shoulder, head, right? And the market came back to test the shoulder. But we're not changing chart patterns here. We're changing SMC's concept. So yeah, chart pattern will see it clearly, but let me explain with SMC. So yeah, this is it. Market from a downtrend. Okay, it came up here. When it came back up, it formed this level as a level of liquidity. I forgot to show you the break over here. So let me just show you here. So I can see the break of structure over here I was talking about. For those of us that have not watched break of structure and don't still understand what I mean. Alright. So yes. So yes, we can clearly see here that this is where I talk about the reverse head and shoulder. And we can clearly see this is where the liquidity is lying. Liquidity lies at places of equal highs and equal lows. There's money lie down here. So my $2, this I represent my liquidity. All right. So market came down broke to the upside, collected all the money from here. Okay, it took money from up so I can fall it back down to the other block. So when it came back down, it came back to this other block, and you pick the other block as an entry and move all the way up. All right. So if you are using reverse head and shoulder pattern, you know how to target your TP. But yes, usually as usual, but yeah, as usual, I work with a standard range liquidity. And then if you want to swing, like you're going far into the game, you want to target far regions, you can also do that, but you have lower probability of that, especially if the market doesn't want to do it. So basically, what I'm targeting somewhere around here as my TP, but this is 1 3.5. I usually trade 1 5, but yeah, this is a clear example here. So this is under ancient model here, ancient model 4, which I'll be showing you directly. So this ancient model 4, you can clearly see the market has been consolidating. Then let me even use this to show you where money is lying down. So I see why this was risky and how it played out again. So this money lying down here, liquidity, we should be learning very soon. So make sure you are still subscribed so that you don't miss out the video when I'm teaching you this concept properly, liquidity. So this is liquidity, money lying down at the top, money lying down at the bottom. So the markets came down, collected money from here. So after collecting money from here, it reversed back into the zone, okay? Reversed to the zone again. So when it continued moving this way, it also came up. Market is very, very funny. Came up to collect the money from everybody here, all right, and move all the way down. So people like us now would have seen that, okay, the market has done something like this, and then they'll continue looking at the market to see what's going to happen next. Now, some people want to enter here and they'll be like, oh, another block is here, maybe something's over here, let me just use it to enter and buy. But guess what? The market came back down to this other block and bought from here. What did the market do here? The market literally engineered liquidity. Some called engineered liquidity. We might talk about that later on. The high of that, of us talking about engineered liquidity. But yeah, this is it. The market engineered liquidity with this zone. Remember, liquidity can be trade line liquidity, equal high liquidity, equal low liquidity. If you don't understand what I'm saying towards liquidity, just so liquidity is money. And where people tend to buy and sell, that's the area. But if you want proper explanation, that'll be the next series we're working on. All right. Our target regions are liquidity. Okay, so basically this is liquidity here. So this region here, you can call it our regional liquidity region. The market used this regional liquidity and then came back to the other block to move up. So we have used this entry model successfully. They have entered from somewhere around there with your pending orders, targeting this ERL, and this will be 1:4, roughly 1:4, right? Yeah, 1:4. But as usual, I target 1:5 and above, and that's literally it. So these entry models are literally just here for you to see. You can take a screenshot of these entry models. Oh, imagine I didn't take my full screen all this while. So yeah, this is a full screen, so I can clearly see it on the screen. Yeah, so you can take a screenshot of these entry models. You can backtest them in the market, see what works best for you, know how to work with them. I usually trade this one because change of character shows in the market well. I hardly work with consolidating markets because it's not really that clear, except it works as inducement and usually comes all the way down. But I'm going to teach you inducement later on. Usually comes way down for me to enter from. So I'm going to teach you this later on. Which shoulder method do I work? Use head and shoulder, reverse head and shoulder. I work with it as change of character. I usually see this as change of character directly and come back here. But yeah, there's liquidity over here that market cleared. So I usually work with 1 and 3 most times. And this liquidity level 4, this 4 original liquidity, I don't usually see it as original liquidity. So I don't usually check it out well. But I just work with break of structure, change of character, check for liquidity levels, check for inducements, understand what I'm working with the market and trade, right? As long as you're targeting 155 and not risking too much in your account balance, you have a good probability win rates. You're good to good market. All right, so I believe this video has come to an end right now. I'll be explaining liquidity in our next video tomorrow. So make sure you are here tomorrow and you're ready to maximize gains from trading. Do want to join our Telegram community so you can see setups, free signals, trades I drop, I trade. All right, so I trade what I drop what I trade. Basically, trade with me on my Telegram community. Join us on Twitter and X community. We're just growing our Twitter community. We started not quite long. I believe we can constantly keep on giving you value in our Twitter community too. All right, like, subscribe, and share. I'm seeing you next. Peace.